Hi, welcome to this week's Professor Brown Agricultural Report for December 7th. Hey, it's a crazy world out there, and I hope I can give you just a quick synopsis of the news so you can make your brilliant decisions in the coming week. Quick takeaway, everything is getting cheaper in the USA. USDA released its November crop report and confirmed the old saying here that big crops get bigger. Corn and beans were both outside of the high end of the professional estimates, confirming what farmers already knew, that the U.S. had a great year for crop production in spite of the weather problems early in the season. And cheap corn makes cheap meat and milk. Combine this with cheap oil, historically low gas and diesel prices, and it looks like all farm commodity prices will stay low for the next several years. The U.S. now has low unemployment and a strong economy, which means the Federal Reserve Bank, which sets U.S. interest rates, will start to raise interest rates by 0.25% increments starting in December 2015. For sure, the U.S. dollar will get stronger and other currencies will appreciate in dollar terms. That translates into an increase from 0 in 2008 to 2.25% by December 2016. Probably the Federal Reserve will raise interest rates 4 times in 2016. Look for corn and beans to stabilize. Prices are already below the cost of production for all commodities: corn, beans, beef, milk, and pork. We are now seeing some farmers being forced out of business as the production side works its way toward higher prices. Avian flu failed to make its dreaded appearance this fall when the migratory bird population headed south for the winter. Temporary easy breathing across the poultry industry, but that could change quickly. Watch for updates as we near the spring and the infected birds head back north again. What about milk? U.S. milk markets remain in the doldrums. Production is constant across all regions, and cheap feed discourages culling. The next 12 months appear to be more of the same. Cattle prices continue to move sideways. Reports of fat cattle losing over $600 per head at the slaughter plant are common. Lots of cattle feeders bought expensive feeder cattle and now can't turn them into a profit as they anticipated. One side effect is that the expansion of the cattle herd in the USA has stopped, as farmers are not retaining heifers for breeding purposes. These heifers are now going into the feeding pens for slaughter. We're expecting a big crop report or a feeder cattle report in January. That could change again, maybe show more cattle herd expansion. Watch this space for more information. Oil continues cheap. Gasoline prices are at historic lows with no prediction for future increases. Seriously, the USA could see cheap gasoline and diesel for at least the next 12 months. That means pressure on the ethanol price, which in turn puts downward pressure on corn prices. No one in the ag media really wants to talk about how low corn prices can go, because this is not what their readers want to hear. But nothing on the near-term horizon points to a higher corn price. And the news about the huge unsold Chinese corn stocks in storage removes another possible support for corn. This could get ugly. Dairy cattle prices remain steady, with springing heifers selling for about the same price for slaughter or for milk production. One notable exception is the price for baby bull calves. This price has declined by at least 70% since mid-July. The high was over $700 per head, and this week was a good supply of bull calves was available for between $150 and $200. This is a reflection of lower fed cattle prices and also a reflection of one major buyer having financial issues and being forced to leave the market. Heifer-calf prices remain constant in the $350 to $400 range. That wraps it up for this report. I hope we got something that you could use. Brought to you by Breedex USA LLC, your source for quality dairy and beef genetics around the world. Thanks a lot.